Hey, what's going on? This is an episode of Not Your Father's Stocks. I am here with Gareth. He is a member of Augury, and we're going to jump into some semi-challenging questions. So I hope you're ready. But before we kind of start, give us a little bit of your background and I guess how you found Augury.
I'm an undergraduate engineer about to graduate this summer. I've been interested in finance for a couple of years, and then I found Augury online via Instagram, and then sort of picked it up from there and really enjoyed the sort of research process and getting involved with it and joining with the Discord and meeting all the guys. So it's been really good fun, yeah.
Yeah, it is. We do have some fun. So Gareth, you had your blog, right? And you write quite a bit.
Yeah, I started it last summer. Obviously I was off during the summer after uni, so I sort of took the time and started writing stuff down really, and whatever came to mind. And it's been good fun. It's good to get the ideas on paper. And I know Connor Haley on Twitter and a couple of other guys are really big into like getting people to do that have started out, and it keeps your conviction, doesn't it? And sort of keeps you reference to a frame of mind, if you will.
Yeah, I think writing is extremely important. I've always been like taking notes as soon as I started investing, like actually looking for stocks to put in my own portfolio versus like, getting recommendations from other people. So like I must have been like a freshman in college. I would write, go on and research stocks and just write things down. Like you don't really know what you're looking for at the time, but you're writing stuff down and it forces you to learn because you come up with like a thesis and then you kind of have to figure out why you're thinking this way or, is this right, and figure out, what's important and what's noise. And that's really what, investing is all about. I think it's the simplicity that is so important. And, I think that's why Buffett is so great because everything he does is so simple. And I'm really, really attracted to the idea of keeping things super simple.
Well, that's it, isn't it? You have to think about the thesis, and writing forces you to think
Hmm.
about what is your idea is, and make sure that it's valid, and it keeps you accountable as well.
Yeah, though that's one thing that writing keeps you so honest. It's such a valuable tool for people to, sit down with a pencil and a notepad and write, just start writing. Like when we're researching a stock, that's mostly what I'm doing. My research process is mostly, I look at, you know, hundreds of businesses and then, I'm always asking, why is this moving? Why is this moving at all? And what's going on here? And then you start to look into, who are the people behind these moves? And then what I've kind of do is I'll characterize them where, my short selling is probably, where I think I get the biggest edge. And that was actually one of the questions I wanted to ask you is, so where do you think you capture edge? And as an investor, where do you think you're better than, the rest of our peer group? How old are you?
24. Yeah, that's a great question. I mean, it's something I've been thinking about quite a bit actually, because about a couple of weeks ago, a month ago, I was sort of in this sort of facing this issue head on. I was like, what really is my edge? And it was something I really thought about. For me, it's the fact that we're pretty small in size and in terms of capital anyway. We're not an institution. You don't have I don't have institutional experience myself. I've not ever worked in a bank or in finance or anything like that. I'm from an engineering background, so I take the sort of like problem solving approach and try and like mesh all the cogs together. The problem solving aspect is, I think, is what I'm trying to get at. But the other thing is that obviously not being an institution, I think there's an edge there in being able to uh, execute basically without being an institution, and understanding how they think uh, is quite important. And then being able to exploit that in how you trade is also quite important, as I believe it is some edge. Yeah.
Yeah, I 100% agree with you. I know for a fact that there's a lot of edge in having a small portfolio. And believe it or not, it's like, I think a misconception is, and you didn't say this, but it just made me think of it, where you said, I never worked in a bank. It's funny. It's like a lot of people like will follow these people that do work in banks. Like these guys actually know what they're doing when it comes to investing, like the game of investing. It's like, oh yeah, I work at, Goldman Sachs or Morgan Stanley. And, people will be like, I just know this from, experience with my friends and stuff, is, like one time I was talking with one of my buddies about, they were, there was like this bond offering, and one of my buddies was the guy on the telephone for like Morgan Stanley, trying to sell these bonds to different investors. And I'm telling my buddy's like, dude, he knows what he's talking about. He makes all this money. He makes like $220,000 a year for Morgan. It's a lot of money. And I'm like, he's an idiot. Like he has no clue what he's doing. I mean, he's literally on the phone every day. Like, don't get me wrong, he's making a lot of money, but don't you get, like, he's on the phone selling worthless bonds all day? Like, that job sucks. And, just because he's making bank at a bank doesn't mean he actually is like a good investor and knows how to, manage capital. So I, basically told my buddy, is like, don't listen to people like that. They don't know any better than, the rest of the crowd. And, be careful of, people get these, like a status thing. Everyone carries around a status. It's like the first thing people ask you when you meet someone. Oh, well, what do you do for work, or something like that? And it's like, immediately they want to know so they can, like, rank you compared to others and stuff like that. And in my opinion, a lot of that is all a trap.
Well, that's the thing, isn't it? I mean, there's people that work at banks, and some of them are great. So they'll be great traders, they'll be great investors, and they really know their stuff with equity research. But a lot of them, at the end of the day, are just salespeople, and they're just selling like mortgage bonds or whatever it is they're trying to sell. They're trying to sell something to someone, and that's their job, and that's what they're getting paid for, and they don't know any different. And the other thing is, obviously, working in a bank as well. Whatever the bank is, they all have their own culture, and they all sort of end up thinking the same of how that bank thinks. And then you take that out to outside and run your own money, and that's really hard to get out of. I think if you were brought up in that environment,
Yeah.
take the old Solomon Brothers or Lehman or whatever, working there, you'd embrace that firm's culture out into the real world when you leave, or they go bankrupt or whatever it is.
Yeah. And, that's, like you said, something that is really important, in my thinking, is culture. And I think, the way I look at investing is different than, the way Morgan Stanley or anyone's going to go and teach, people investing. Is like, people ask me about stocks all the time. And I literally tell them, this is a gambling game. You are placing wagers, and, our wagers are, don't get me wrong, they're placed on, businesses and cash flows that are going to hopefully come into our pockets. But now, a lot of people don't want to look at the stock market as a casino, and, pouring their money every month into a pile of random stocks is, not going to be a great idea. If the market's a bubble, all of these people, every month they get a paycheck, and, they dedicate X amount, percentage to their paycheck. Well, they're actually buying into the bubble, and they're going to get a lot lower returns, for the duration of their life if they are, overpaying for businesses. And that's like, I really try to keep my investing as simple as possible. But, I think what we do a good job of is actually finding businesses where we're outlaying money now, where we can get significantly more money in the future. And not everybody is playing that game.
Well, that's the thing. We don't take. I feel like we don't take stupid bets. We take a bet, and we know within reason that there will be some sort of reward to it. We're not speculating. We're not buying AMC or GameStop or trying to short squeeze, some of these SPACs that are out there, or whatever it is. We take sensible positions, and it, from what I've seen, more or less pays off.
Yeah, I will admit I was trying to buy GameStop at $4 a share, but I literally bought it like 2 times and then, ended up selling it at like 6. I bought it at like 450. I sold it at 6. And then like, oh my gosh, I bought these calls on GameStop. Like did I tell you that story about when I bought the calls? I know I put it in the chat.
Yeah, I remember hearing about it. Yeah,
Ugh,
yeah, but that's one of the things you'd never have predicted that it would have done what it did last summer. It's such a right tail event that you'd never.
I was betting on this crazy short squeeze. I mean, I didn't know it was going to go to 450, but I was like, this could. I've seen stocks play out like, so it's like, how some people watch sports all their life and they remember, the certain play that happened in, 2002 or, whatever it is. Like I actually know all these crazy stocks and like in 2020, GameStop did this. And, like I know all of them from, it's like I've been hanging out with Maj from Geo Investing a lot.
Yeah,
And me and him will go grab a drink and we'll talk about stocks. And it's like, he's got, 20 years maybe on me, but we still have enough like reminiscing where we're like, dude, do you remember this? And we talk about how it played out. Like the other night we were sitting together and we were talking about RVP, which is like a syringe company. I don't know if I really haven't mentioned it too much. I did a live stream on it, but it's just an interesting setup. And me and Maj were talking about it, and oh well, this might be a little bit like this one from 2014 or something like that. It's just kind of funny.
it was like back in school. You'd be talking with your mates about sport or whatever it is, and they'd mention this one player who scored this one goal in like 2010, and you'd be like, I have no idea how you know that, and they knew all the stats and like their exact position and the amount of yellow cards they had in the game, and it's crazy, But yeah, like you say, I guess we growing up with it now, sort of learning about these moves that we're seeing, and you'll never forget it, But most people don't get it. That's the thing.
Yeah, I love investing so much. Like I grew up a big sports fan and like, all that stuff. And I played at like a high level in college, but I think I actually know that I love investing more than baseball. Like I literally had never growing up, I never had any posters of any players or anything on my walls. If you come into my office, my entire office is covered with, faces of Charlie Munger, Warren Buffett, Benjamin Graham. Obviously got, Michael Berry back here. I literally love these guys. Like the information that they give is just, it's so valuable to me. And it's like, I can apply anything I learned from these guys at any, in the darnest situations or events in my life. It's like I you don't realize how much you rely on these investing principles. If you actually consume what these guys say and you apply them to every aspect of your life, it's like almost like the game of investing does not start or stop behind like the screen or an SEC filing. It's like you can use these in all aspects of life.
Well, that's it. There's so many mental frameworks and there's so many innate skills that you need to be a good investor: discipline, motivation, like work ethic. And not many people possess all of those skills at once, which makes it the great game that it is. But at the same time, you can take so many of them skills and apply them to so many areas of your life: fitness, eating well, reading.
Yeah,
Since I've started, I've picked up so many books. I've filled a wall of my room just of books, and I didn't have that before. It's great.
it is great. I've been reading a lot lately. I'm like, it's pretty much exactly how I am, where in everything I do, it's like I'll read about a business this way too, where I start reading about it and I just, I know it's too early, so I stop and I go to something else. Me and Andy were talking about a ticker VERB, which, I actually had my buddy who, he's actually a banker up in New York. He, manages money. He texted me about it. He's like, hey, what do you think about this company? I started looking into it. Definitely attractive, but I was like, it's too early, too early, too early. It was just because it was underfunded. And that's my worry now. Is Andy brings it up to me because he watched the LD micro thing, but I still worry that it's, too early. And I'm big on like timing and positioning, which may be silly to some people. I think timing is like the most important thing in the market. Uh, if I was 2 months away from my GME calls, my positioning in life would be a very much so different. How is timing not important? Uh, you know, and
Well, it's absolutely pivotal. I mean, I was reading Hedge Fund Market Wizards yesterday by Jack Schrager, and I'm pretty sure most of the equity guys in that managed to get out in 2000 or 2002 and 2008, 2009. They got out the market. And whether that was luck or skill, you decide. But that saved them a heck of a lot of money, and doing that, obviously did them quite well, and it's boosted their returns on the upside as well. So time is definitely important. And had you got the time right on, a couple of the stocks we've seen, the outcome would have been vastly different, I think.
I got to read that book. I don't know if I actually have that one. I think I rented it from the library, so I don't actually like physically have it, which I've become addicted to actually having every book in my library because I always need to reference my books. Like I always need to like almost make sure that I remember it the right way. But I remember the most influential investor on me is a short seller. Literally no one knows who he is. And he tweeted, he survived 2001, he survived 2008, and he runs a concentrated portfolio, very concentrated, only 5 stocks in his portfolio. And he tweeted in very early in COVID that he was long nothing. He had zero exposure long. And when I read that, I was like, holy smokes, this guy's crazy. Like, he's that confident in his. I think that's like, to be completely honest, I think it's almost a vote of confidence in his ability to pick stocks, is to be long nothing. To be looking at COVID in the face and just say, you know what, I don't want any part of that. What this could be, let me just exit everything. And, that means that he's betting on, okay, well, if COVID ends up being okay, I have the ability to pick winners from anywhere in the market's position. So it's interesting. And I think, you could probably only do that in small caps. Like we said earlier, what's our edge being small investors? Like, don't get me wrong, this guy probably has $100 million or so. Or at least, I would estimate at least, his portfolio is probably between like 50 and 100. But it's just like really, really, no one understands. I met with this girl the other week, and she works at like this, I don't know, $4 to $5 billion hedge fund. And the way that they manage money is so different than the game that we're playing. It's, just completely different. But, fact of the matter is if you were around when I bought ARC, I think, right? Yeah, you've been
Yeah,
around.
I think so. Yeah.
It was like, that was a stock that I just found one day. It was like, I got a routine after hours. I like to see who's the biggest winners and losers. ARC was on that list. And it took me like, I ended up researching it on a weekend, but it took me like 2 seconds to say, well, this is a good opportunity. Why is it going down? Oh, because it got, removed from the NASDAQ or the Russell 1000 or whatever. And all of these funds were forced to sell it. Stock chart is straight down, like heavy candlestick. And it was trading at like 70 cents. And I'm like, yeah, I got to bet on this. This is like a pretty good business. Look at it, not a lot of research there. Like a lot didn't matter. You're buying the stock at 3 times earnings. It's like, or 2.5 times earnings. Like you don't got to do a lot of work there. And I feel like, these are some opportunities. Like that's what I would call like a starter stock. That's something that someone could get into and understand pretty easy. They print stuff and, you're buying it at a fifth of book or a sixth of book and at earnings of an earnings yield of like 30%, 35% or something like that. If we're like talking to first-time wagers, first-time bettors, first-time gamblers, and they're a little bit nervous to start playing the game, well, holy smokes, this is a good investment for you because this is something that you can hold and, basically watch and learn how the market works. And it's like, you don't have to be brilliant. You don't have to be a genius to figure that one out. It's like a very cheap bet. And if we can kind of get people into these cheap bets, like they should make money.
Well, that's the great thing about businesses that are cheap, and obviously they've got to be good. You're not just catching a falling knife, but if you do find them, they're great. They work. They pay off. You can't go wrong with a cheap business if it's of good quality, obviously.
And that's the thing. It's like Ben Graham's biggest downfall was he just bought cheap, and he didn't believe in talking to management teams, and he didn't at the time. We're talking about like, I don't know, 1950s. Not everyone had a telephone and could call up the CEO. It's much different. Like in 2020, I can get up on the phone and call the CFO, CEO, anybody I want, and get a sit down with them and take 5 minutes, 10 minutes of their time to learn a little bit about their character, the way that they're thinking, and so forth. And, that's just fact of the matter. The game has changed. It's not 1950 anymore. It's 2020. But I want to hit a couple of other tough questions that I'm going to throw at you. So I hope you're ready.
Let's hear them. Yeah.
All right. So, okay, we figured out how you think you can capture edge. And all right. So my next question is, so far, you've been with Augury, since 2019?
What, a year and a bit. Well,
okay.
Yeah, a year and 3 months, I think.
Okay. So far, what's been your best fold? What did you think was going to hit, and then you realized that it wasn't, and you got out?
Oh, APT for sure. APT for sure. Yeah.
Yeah. And how did that work? Good fold?
Not great. I'm going to be honest. Not great.
It wasn't a great fold?
Well, I folded. Yeah. Just the timing was out,
Yeah. But, like.
It was a tough bet, that one. It was a tough bet.
Yeah, it's a tough bet, but you recognize, I just remember, I was planning that you would choose APT because we had talked about it on the side a bit. And I remember we were all long, and I remember I sold that, like, I had sold, and it was only a really small position. I was at like 6% for me, which is, the 6% position doesn't bother me at all. Like, I really don't, it's a full-size bet, but it's not like a keep me up at night. But you were betting heavier than that.
Yeah, I will admit I got that completely wrong.
Yeah, and that's a good thing.
Size.
Yeah, you gotta, and that's the name of the size is the name of the game, and it's but yeah, you gotta people. It's like no one is going to go out there and say, teaching people when to bet or when to fold is like, it's not going to make anyone any money. Like, people don't think that way. Folding is so important in investing. And I'm good at folding because I play short side a lot. So I learn how to fold a lot because I get stopped out. But on long investing, it's a lot more difficult because this is why I value the balance sheet margin of safety so much, is like, that's my fold. I mean, I don't actually fold, but like, I know I'm getting that much value. So, whatever you liquidate the business at, like, I'm not selling under that price. I'll call someone up and do a private deal on the side if I actually had to. It's like, there's actually stuff. I think that's another thing that people discount that goes on, is like, now that I've been running Augury, I actually get invited to these things, and you learn more about how the private transactions work and stuff. And it's really interesting. Like, you're talking to the CEO and he's like, we're not selling stock. Like, the business is too cheap. Like, I think the company that I like now is ELVT. You got a management team that's sitting there saying, we're not selling stock. We're literally buying stock. Like, our business is way too cheap. We need a buyback, and, we're going to make money. We have no clue what the market's doing. And another one is, me and Maj were talking about, is RVP, where, the CEO is like, the market makes no sense. My business is so cheap. I don't get it. What's going on? What's going on? And, that's just, it's an interesting dynamic that most people don't think about. It's like the guys that actually hold the large positions in these businesses have no interest in selling the stock at absurdly low prices. And just because the stock hangs down there for a while, like I think FWP is one, right? Where it's like trading cheap.
Oh, it's cheap for sure. Yeah, I picked some more up today.
Oh, did you? Yeah.
Grabbed a bit more. Yeah. Well, it had that volume spike, didn't it, the other day? Monday, I think it was. It went crazy. One of the other biotechs, I think, exploded. The volume went mad on it. I dumped a bit at the top end and then picked a bit more up today.
No way. That a baby. That's how it works. That's how it
Yeah.
works. What did it? So it gapped up?
It didn't gap up. It was just a spike of volume. You know how it has them really long wicks on it.
Yeah,
It's
yeah,
been trading like that for months, and the wick's dead long, and it always gets sold down.
yeah. Always, because I mean,
So I just sold a bit because I thought I'll definitely go back down. And
and
I thought
sure
there'd be a good chance, and it sure enough did. So pick some more up.
that is okay. That is exactly what that's like literally your edge right there is understanding that you can get out of something like this, and that the prospects of the business. So I'm looking at the chart now. It's like it actually got all the way up to almost 975. It looks like we're this is trading. What was cash value? It's like literally 970 or something, or maybe it's 10.
It's more than that, 10 a bit. Yeah, it
Yeah,
didn't quite reach its nav, but it wasn't far off.
I
It
remember.
always gets sold all the time. It'll go up, and it'll always get sold.
Oh yeah, for sure. Because you're okay. Because the value at it's like the risk to reward value is like the value I always talk about. The dynamics change greatly when the stock is trading at 970 compared to 740. Like if you do, me and you had talked about the Kelly way back.
Yeah.
If you did the Kelly on that bet at 9 compared to 7, the dynamics change so much. So, with a couple dollars in price change, it makes sense why this would sell off. And I remember when I did my initial research, I looked at this and I was like, this is something that these are like the types, this is like a true value play. Like I used to play these back in the day where I would buy it at, let's say 7 and then sell it at like 950. And I would just play that range. And it's like this stock in particular, since 2020, you've been able to do a round trip between 750 and 975. Let's say you would have been able to do, let's say you're trading 1,000 shares. You'd be able to do a round trip on this stock between those two prices 1, 2, 3, 4 times now. That's a one. It's a great range. And 2, it's like, holy smokes. If that was your strategy going into the trade, okay, I'm going to trade between, 750 and 950. And you're going to make $2 a share on 1,000 shares every time, dude, you've gone through 4 round trips. That's not, if that's your plan of action, right? Like I always kind of talk about, you got to make a plan of action. And people can get relatively creative with how they're going to manage risk and how they're going to manage positions, which, this particular one, that's kind of how I would have, that's how I was thinking about it originally. But there's also upside. You can, if that drug, that legal case plays in FWP's favor, I mean, there's a lot more upside than $10 a share.
Yeah, I mean, we're basically getting free business at this point.
Yeah. But okay, so your best fold was APT, which you were betting big. It's not easy to fold that type of play. So
no, it was a tough bet for sure.
I thought that was I thought you did a really good job on that one. I remember it popped up to what, like 15, and you sold out.
Yeah, it was. Yeah, it did. It came back. Yeah, came back on us after going low, and I thought, right, that's it. Time to get out.
Yeah, that was good. That was great. I remember kind of
It
going.
pays off.
Yeah. Okay. So final question. What's your biggest bet?
My biggest bet at the moment is Smith Micro.
Smith Micro. All right. And that's your favorite stock?
It's actually not my favorite stock. I actually prefer VTSI because I've done a heck of a lot more work for it. Um, I feel more confident in SMSI and the thesis playing out, but the work I put into VTSI to understand what's going on, had I had my uh, price level again, I'd probably make that a decent size bet.
Okay, so let me ask you this question before we'll wrap up here, I guess, in a minute. But I'm gonna ask you this question. Okay, let's say over the next year, VTSI hits $20 a share, and SMSI stays at, let's say, 5 to 6. Would you be upset that you didn't bet more on VTSI
Yes,
because you
I
think
think
it's a good idea?
it's a great idea. Yeah,
Did you write about this? If you should allocate more to VTSI or SMSI?
I did my usual process of sizing it up based on risk to reward, and then the it looks like the reward has grown since I've done that, and then between juggling time and commitments, I've obviously not gone back and got nothing, and then I had my price level set out, and I didn't get the third one because it was lower than what the stock traded at, and then it's accelerated upward.
Yeah, VTSI is interesting. I like that one. But I also can't like, SMSI has got it could that business is really, really pretty on paper. Like we get some money
It, isn't it?
flowing through that. We're gonna make some money. So it's
Yeah.
hard. But cool, interesting. It's always a pleasure to get inside, the thinking of other people and how they're playing and what they like. I always love hearing different stock ideas. You got a fresh idea?
I have got a couple. Yeah, I need to pad them out, but I do have some lined up.
Anything, any details you want to share?
It relates to energy. That's all I'll say.
What is
Don't
it?
want to give, it relates to energy, coal mining. Don't want to give too much away, but
All
it could
right.
be good. It could be good. I'll,
Yeah, and I was thinking, okay, what about this where I kind of had mentioned it. You know, I'm reading about Lordstown Motors. Have you read that? Where like the
I've
EV
seen the news on it about going concern. Yeah.
and then the CEO, CFO drop out. And then I'm reading another SPAC yesterday. It's some autonomous, truck company that's gonna change the world of supply chain management, yada yada. And all of these companies have insane market caps and literally zero top line. And we've seen endless investment into these companies, but as the timeline gets delayed, the value of these bets just gets crushed, and it's really bad investing in my opinion of what some people are doing. But whatever, everyone's going to make their own choices. But I was thinking, if everybody is wrong on EV, what does that look like? Where all of this money outflows of EV companies, because we know like Tesla's market cap is still huge. If you add up all of the market caps of all of these companies, like all the EV companies, it's a truly absurd number. And I kind of put on my story the other day. It's like, there's a race right now to make as much money as possible, but there's going to be a point in time where the race changes to keep as much money as possible. And like how many people, like I always say, I have zero exposure in cryptocurrency and I have zero exposure in EV. And I could be dead wrong on both of these and I could look like an idiot, but I'm able to pick stocks at a good enough pace where I can keep up even with no exposure to these industries. And I did make a little bit of money on that AYRO stock. So I guess I had some exposure at one point, but you know, if everybody's wrong on EV, so does your play have terrific upside?
Well, it's not so much as to whether EV versus traditional energy plays off. It's more just it's cheap and we still need coal. So
Well, is that will that act as a tailwind at all?
I mean, if it well, the transition to EV is still going to sort of go ahead, isn't it, with the climate commitments that the the politicians are making. But in terms of the actual stocks, I don't think it's that material. The stock's so cheap at the moment that I feel like there's upside there. I haven't done all the work on it yet, but it it seemed, from when I looked at it, I only gave it a brief scan last week, and it did seem quite interesting based on what I'd seen. And they don't just do coal; they do like aggregates and mining activities. So I think they mentioned they had a lithium mine, so they might even win on that front with the EV thing. So
Okay. All right.
it's interesting, yeah.
All right. I'm excited to hopefully check that out soon. But all right. I guess that's where we're gonna wrap it up, unless you have anything else.
No, that's it for me.
All right. Well, thanks for coming on. We're going to have to talk again soon.
Thanks for having me. Yeah, great.
All right.